Love to read books? Go and grab this book on mutual funds. The same content of this series, Mutual Fund Masterclass from Beginner to Confident Investor, is available in a readable format. The name of the book is Mutual Funds, a mystic pool of money that fills every bucket falling in it. Click on the below link and grab your copy today.
This book is the result of years of learning and experience working in banking, insurance, asset management, and serving as a SEBI registered financial advisor and research analyst. Over the next few months, I'm going to teach you every important concept from this book completely free. By the end of this series, you will not only understand mutual funds, however, you'll also know how to use them to build your own mutual fund portfolio with confidence. If you enjoy learning through reading, you can also explore this book alongside the series. I have included the book link in the description below. Whether you are a student, a working professional, a business owner, or someone taking the first step towards investing, this series will take you from the absolute basics to advanced mutual fund investing. So, without wasting any more time, let's begin our journey into the fascinating world of mutual funds. Every invention solves a problem. Cars solved transportation, mobile phones solved communication, air conditioners solved heat. What problems did mutual funds solve? That's the story. In the previous video, we understood about index and a little bit about index funds, which is a basket of the stocks. And these stocks are those stocks which are performing to strive growth. All index funds are mutual funds. However, all mutual funds are not index funds. That is why we are resuming our journey to understand mutual funds now. And we'll also keep on learning about the index investing as and whenever it is required in this journey. Imagine an index is like buying a ready made t shirt. Same design, same color, same size. It fits many people, however, not everyone. Mutual funds are like a tailor made shirt. They measure your size, your preference, your budget, your purpose, and then recommends different outfits. Index investing is an excellent way to invest. However, not every investor has the same needs, the same goals, or even the same investment setup. While some forms of index investing, such as index ETFs, require a trading and demat account, hence many investors prefer the simplicity of mutual funds, where they can invest without opening either. As an investor, you can also invest in index through an index fund, which is also obviously a mutual fund. That is why we have to understand about the mutual funds now. Every index fund is a mutual fund. However, every mutual fund is not an index fund. The mutual fund universe is far bigger, covering different goals, risk levels, asset classes, tax saving options, retirement planning, and much more. That's the journey we are starting now. Many first time investors don't have any of these. Mutual funds, on the other hand, can be invested in directly through AMCs, through platforms, through banks, without opening a demat account in most cases. This makes mutual funds more accessible for beginners. Although you can invest in or through mutual funds through a demat or trading account, however, mutual funds also offers an option of investment without having a hassle of demat and trading account, unlike the stocks or index. In our previous video series, I for investment, we have already solved the problem of selecting stocks by choosing the option of investing through ETFs or index funds. Now let's solve the problem remain even after choosing the index investing.
I don't have a DMAT and trading account.
Many beginners don't want the hassle of opening a demat and trading account, especially if they are interested in ETFs. Mutual funds simplify this process. As for the investments through mutual funds, the demat and trading account is not a mandate.
I don't understand trading.
Mutual funds eliminate these exchange related decisions and terms like market order, limit order, ETF trading, when to buy, when to sell, etc.
My financial goal isn't just wealth creation.
An index fund is great for long term equity investing. However, if your goal is emergency fund, child education, retirement, buying a house, or recurring monthly income, then mutual fund industry offers solutions across different goals, unlike index funds or direct equity.
I don't want 100% equity.
An index fund tracks equity. However, what if you want exposure towards debt, gold, hybrid, international equity, and some other asset classes? Mutual funds provide those options under one umbrella.
My risk appetite is different.
Assuming you are 65 years old, should you invest exactly like a 25-year-old? Probably not. Mutual funds offer products across different risk levels.
I don't want to watch market hours.
ETFs trade throughout the day. Some investors prefer placing a mutual fund order without worrying about intraday price movements.
I want tax saving investments.
An index fund won't qualify for tax deductions unless it happens to be an eligible scheme. Mutual funds include categories like ELSS that are designed for tax saving.
I want regular income.
An index fund doesn't automatically solve income needs. Mutual funds can support your income requirements through systematic withdrawal plans and through income oriented debt or hybrid strategies.
I don't know how to allocate assets.
Now you don't need to be burdened for that because mutual funds makes it easier to implement different asset allocation strategies. A mutual fund is defined as a pool of investments. Today we have just dipped our feet into this pool because while a mutual fund may be a pool of investments, the knowledge behind mutual fund is an entire ocean, and every video in this series will take you a little deeper. Stay tuned for the further videos.